All right, in this last lesson, in this introduction section, we're going to talk about ethics. Now, to kind of give you a preview of what's happening here, we're going to finish this ethics video here, and then the next couple of videos will be examples related to what we talked about in the videos prior to this one. So that's kind of how we built this. So this is kind of that last lecture video before we hit you with some examples that you can go through and follow along. So let's talk about ethics in accounting. Now, the reason why this is obviously in the chapter, and this is a big thing, is because ethics are important in accounting. And without ethics, we're not going to have right financial statements. They're not going to be correct. Shareholders and external users are not going to rely on that. And we want the financial statements to be reliable because we want the general public to be able to trust the financial statements that we either review or we produce in accordance with the state, federal government. Okay, so ethics is super important at the end of the day. So we're going to kind of cover that and show you some of the laws or acts that have been passed because of unethical accountants. So let's jump in right in here about the importance of ethics. So the reason why this is so important for accountants is because if you look at research when it comes to what we call a certified public accountant, also known as a CPA, many surveys will list the CPA as one of the most trustworthy professionals amongst individuals and companies. And depending on which survey you're looking at or what year it is, a lot of times your CPAs are usually number 2 to that of a doctor. So we are very trustworthy in the eyes of individuals and corporations and businesses that in order to uphold that trust with the public, we have to keep ourselves to a high ethical standard. And so that's what we're talking about here. Ethics plays a big part in making sure that we keep CPAs as one of the most trustworthy, if not the trustworthy, most trustful financial advisor to a company or to an individual. So what is ethics at the end of the day? Well, ethics is often defined as a standard of conduct in which someone uses to recognize when something is right or wrong. Now, a lot of people often get confused on ethics and legalness. Ethics is not necessarily about is it legal or illegal. Ethics is kind of that moral compass we have on what feels right and what doesn't feel right at the end of the day. Now, this ethics here for accountants can be shaped by something called a code of professional conduct, how we expect accountants to actually act in the world. So that's called a code of professional conduct. And usually these are put together by professional organizations. So there's a professional organization called the American Institute of Certified Public Accountants, or the AICPA. And that is a collection of accountants who are members of this professional organization that helps advance the accounting industry and the CPA industry overall. And so they have a code of professional conduct. So in order to become a member of this organization, you have to agree to the code of professional conduct. And if you don't, you kind of get kicked out as a member of the AICPA. And most organizations have some type of code of professional conduct that their members have to abide by as a member. Now, this also can be shaped, so ethics can be shaped by also personal beliefs. So your personal beliefs, how you've grown up, what you think about the world, how you think about what's going on, does aid in your ethical behavior. And so that's an important. And then public perception. What does the public perceive us? That also has a function in ethics. Now, because of all of this, we at one point or some point in the timeline, we kind of said accountants were responsible for their own ethics. Well, we kind of saw where that went wrong in 2002 because of the financial, or 2001 because of the financial meltdown that happened due to fraudulent financial reporting or fraudulent financial statements. Companies were like cooking the books basically of their financial statements. So because of that, we couldn't self-govern ourselves anymore. So we have the Sarbanes-Oxley Act. So due to fraud in financial reporting, the Sarbanes-Oxley Act was passed as a way to restore confidence in the accounting profession. So obviously, if there was a scandal of fraudulent financial statements, and there was actually a few companies, it wasn't just one, but there was a few companies that lost trust in accountants. And so as a way to restore it, Congress passed the Sarbanes-Oxley Act to restore confidence in the accounting profession. Now, it was one of the most comprehensive reforms of auditors and accountants to date. Before that, it was pretty much a self-governed kind of a deal. Not totally, but pretty much. So the Sarbanes-Oxley Act, what does it do? Well, it requires management to certify the responsibility of the financial statements, including ensuring that they have proper internal controls, they have proper supervision of the audit of such reports, and ensure accuracy in the accounting report. So we're putting more pressure on those high-ranking officials of an organization to say you're responsible for those financial statements and you are signing and attesting to the accuracy of those financial statements. Now, consequences for not having clean books: prison time and fine. So we've literally solidified that in the Sarbanes-Oxley Act. Before then, it was kind of at the will of the industry per se, but not so much anymore. So that is kind of just a brief overview of ethics. We'll continue to talk about ethics as we go through this course, but what you should know is that we have the Sarbanes-Oxley Act. So the Sarbanes-Oxley Act is an act passed by Congress as a way to restore confidence in accountants and the accounting profession. Some of the things that it makes us does is that it requires executives to sign off on the financial statement saying that they're attesting to the accuracy. We didn't really talk about it, but it also put new procedures in place for auditors of public companies and making sure that rotations happen and make sure that we're testing for certain things like internal controls. And you should also know that ethics plays a major part in why accountants are treated as the most trusted professionals in the world. So hope you enjoyed this lesson on ethics, and we'll see you in the next lesson. Hey guys, it's Patrick. Before you skip ahead to the next section, just wanted to come on here and tell you to not forget to like this video and maybe share this video with someone that you know that would get a lot out of this lesson. Maybe a classmate that you know. This would be a great way to introduce them to this channel. So share this video with them, maybe your mom or your dad, someone, so that they know that you're really learning accounting topics here on YouTube and you're not just playing cat videos over and over again. Now, if you want to help us grow this channel, what would be great is if you press the subscribe button and maybe even turn on the notification bell if you want to get alerted the next time we upload a video to this channel. And put in the comment section below, what did you eat last night? It would be so weird for people to come and look at the comments, but what did you eat last night? I might throw in a comment after you if you put that in the comment section below. So do that now. What did you eat last night? All right, so enough of the fun stuff. Hope you enjoyed this lesson, and we'll see you in the next video.